Guys, welcome back to the show today. I'm excited because we have royalty on the show, right? We're going to be talking about buying, selling, creating notes. Oh, look at that. We got a royal scepter up there. And so we are going to be talking to an individual that's an expert in the note space. Also in marketing and branding, the note queen is what she goes by. You can't forget that. So let me introduce you to my guest, Dawn Rickabaugh.
Hey, thank you so much, Connor. It's great to be here.
Yeah, it's great to see you on the cruise there in Alaska, and it's always good to hear you speak. You know, you got a lot of good information about the note space, which I think is kind of what we're talking about is a little niche market that a lot of investors want to get into. They just don't know how to do that. And you have ways for basically them to reach out to you. You have a website, you have a membership site that they can go in and talk to you. You do a lot of podcasting and a lot of training. So she's a great person to learn from. Go ahead and kind of introduce yourself and let them know where you're from and kind of when all this Note Queen kind of began.
Okay, thanks a lot. Well, just a walnut-size introduction. I'm in my 50s now, so I'm no spring chicken. But I just came to this note space in 2004. I quit my nursing job because I went to college, good girl, got married, popped out a bunch of babies, and was working as a nurse in the ER and the ICU, and I loved it, right? I love my nursing job, especially the ER. It's like, you just never knew what was going to come through the door. It's exciting. It's sexy. You got stories to tell, right? Everyone's like, oh, what happened tonight? It was a full moon because there was a lot going on. But then I always thought I could be an entrepreneur. And so I started on the weekends. I would go to these conferences and about all sorts of things, buying property, trading options, being a stock market kind of person, day trader. But then when I stumbled onto the notes, I just fell in love and I just kept coming back to it. So then I would go to conferences for 7 years. I was a tire kicker. I would do a little bit, but I kept my job and I was raising 4 kids. So I had a full-time job with that. So but then the universe said in 2004, things were starting to change. The company that I was working with, a lot of changes were going on, and I really think it's my time to leap. And then, the universe had a way of giving me a real good kick in the butt, pushing me over the edge. And it was evident that I needed to make a change and I needed to make it quick. So I had saved up a little bit of money and I quit my nursing job on a dime, gave away all my work, and said, I'm going to be an entrepreneur. Now, I don't recommend that everybody needs to do it that way because that was pretty drastic. But
make that plunge.
And everyone it's a personal conversation. I was still having 4 kids to raise and 2 mortgages and 4 kids and 3 dogs. So it was really quite stressful. But wow, does that have the effect of focusing you, right? you can't afford to fail, right?
Exactly.
Which I felt like I did for a long time. Like I like to say that I the trip to the queendom was like on a short bus. I felt like I wasn't really being that bright or that successful. I would see other people that seemed to do it a lot quicker and easier than me. But really what changed everything for me is when things stabled out, is when I decided to quit trying to just turn a buck. But a good friend of mine said, quit thinking like just someone who has a job and is making money. Don't try to broker, don't try to wholesale. Be an investor. Think like an investor and invest. So the next deal that came across my desk, I said, okay, well, now, I'd blown through all my own net worth, just keeping things going, right? So then I really had no money of my own. By the time I was going to say, yeah, I'm going to be an investor, I didn't have my own money, not even 15,000 I could put to a little note. And so, but I had a friend who would say, I believe in you. And we've been working together on some other stuff. I said, okay, will you give me the 15,000? I'm going to buy this $25,000 note for 15,000 and I'm going to pay you 15%, but I bought it at I don't know, 20 or 30% yield. So I got to keep $75 because of the yield spread. And I got to learn. I didn't just try to flip the widget, right? I invested and I learned so much more and I will never regret that decision. So then I had none of my own money invested except for what I blew on my Harvard style education, becoming the note queen, right? Uh, but I go step and repeat, $75 passive income out of thin air. Let's do it again.
Yep.
Step and repeat. And a year and a half later, I look back and I go, oh my gosh, the PITI on my Southern California home was covered on a passive basis, just working these yield spreads on top of my investors. They were happy because they didn't have to do the work, and I was happy because I was being able to leverage other people's money and solve problems by buying notes that people needed to cash out of. So it just was that was a game changer where I could create basically the equivalent of a base salary for myself. So I wasn't having these wild swings when I had 4 kids, 4 mouths to feed, right?
Yeah. So I mean that's pretty common. I see that on here because I talk to a lot of entrepreneurs, and even myself, it took me 6 months before I did my first deal, $700. I know a lot of people whose first rental property cash flow $25, and it's not that it's the amount of money. It does something where even though you're only making $75 cash flow, it opens up a different thought process. It says, now I can do this. Now I can rinse and repeat. Now I can get more efficient at it. Now I can figure out how to do this on a higher scale. And it starts this chain reaction. I see this pretty commonly with investors. Yeah. So so you just jumped straight into notes, right? You didn't have any wholesaling or rehabbing or rentals.
That's another really interesting thing about my journey, I think. But besides the fact that I went from nursing to notes, it wasn't like I wasn't already a real estate investor. I wasn't a mortgage broker. None of the things that were in the industry. I just went from one passion that I had to another passion that I had. And so to learn notes along the way, I quit my nursing job. And so I had to try on some different hats, right? Because what I like to call that dance between property and paper, it's just, to me, it's two sides of the same coin. So if you know something about notes, you know about real estate. If you know something about real estate, you already know more than you think about notes. People make it this really huge shift, but to me, it's not. To me, it's all sort of one conversation, just different sides of it. So, but I just put on the hat. I did a realtor thing. I did a realtor thing for a while. I'm not a good realtor. I cannot stand that whole thing.
Yeah, it's just,
right? If I'm a listing product, I cannot deal with that. I did short sales. I want to shoot myself in the head. I said, never again will I ask a bank for permission to close again. I just will never work with banks. Okay.
Yep.
They'll crawl and scratch and ask them to give me anything. They can just take it and then and so I did a few different things during that 5 or 6 to my niche, because at one point I was working for a couple of years for a company that was just flipping. I mean, during the years basically between 2000 and 2005, 2006 in Southern California, everybody was making a killing. Like you could just buy. You didn't even have to be good at buying at a discount, but the market was appreciating in such a bubble manner that, if it took you a year longer to close than you thought, you just made an extra 100,000. So a lot of money was made, but a lot of the people I was calling, we had this cold calling thing, call all these people that own their properties free and clear. They were saying, honey, even if we wanted to sell, we would never sell for cash. I go, why not? Well, because we're going to have high capital gains. We need income for retirement, and we want to leave a great inheritance for our kids. And I heard that over and over and over. And then that reminded me, oh, notes. They just don't know about owner financing. All of these people who have their rental portfolios, this mom and pops, they worked really hard their whole life. They have 5 or a dozen rental portfolios. They own them free and clear. Now they want to retire, but they don't want anyone else managing their property. They don't want a property manager. But if I showed them how, if they could carry paper on those same rentals, they could double the income that they were, at least in the California market, they could double the income they were taking down and have none of the hassles. So, and IRS what is it? 451 IRS, I forget it, but the installment sale, where they can defer capital gains by carrying paper. They have a great income for retirement, even double of what they were taking home in rents. And they leave a great inheritance for their kids, because a lot of kids, they're not the types that are going to roll up their sleeves and be real good at managing property. They just want passive income, right?
Yep.
So I saw, that's what it brought me back to where I started. And I go, it's time for me to make a leap. And I just said, okay, guys, we all parted ways. The Note Queen brand was born in 2007-ish. And I've been working out of my home office ever since. But yeah, so basically, remember I told you I started with that portfolio. I'm going back to what you actually asked me. I started building a portfolio of owner carry paper in 2009, I want to say, and I'm still have a portfolio of paper and always adding to it when it makes sense. And I have people that invest with me. But now that I moved out of Southern California and now I want to play in my local market, and here in Carson City, Nevada, where it's 30 minutes north to Reno and it's 30 minutes up the hill to Lake Tahoe. I really love it here. And now I want to play in the property space. So most people do property, they do wholesaling and rehabbing and flipping or long-term rentals or a combination. And then later in life, they switch to paper.
Yep.
Well, I was kind of born breech. I kind of went the paper way. And now I'm coming back to the property and going, hey, now I know how to do a lot of stuff. Now I have a lot of money behind me. And I already know the disposition strategies, right? I know owner carry and notes and how all that works. So actually, I actually have an unfair advantage to most real estate investors in my market because they do not understand owner financing and notes. So I'm kind of like maybe a little different trajectory, but I guess I always like to do things the hard way.
Yeah, I mean, definitely. Like most people start out wholesaling, they move into rehabbing, landlording, and then get into notes because they're tired of working with tenants. So that's probably why it was tough for you because you jumped into something that I think a lot of it is that people are scared of interest rates. They think it's a lot more difficult. They don't like the financial calculator. They remember college. They went to financial accounting and they like that wasn't fun. But when it's in the real world and learning it actually makes you money, it's a lot easier to sit there and learn it than sitting in college when you'd rather be out hanging out with your friends and doing something when you're like, this is not what I want to be doing. When am I ever going to use this? Then little do you know you're going to go into real estate and it's actually going to pay off quite a bit. So when you're buying these notes, what is kind of your niche? Are you looking at performing, non-performing? What type of size of notes? Are you buying little tiny notes? Are you buying bigger notes, short-term notes? Let's kind of go into how you perceive a note to be, or the way you want it to be structured to be beneficial to you.
Right. Well, so my range is everything from the tiniest little note I ever bought was probably a $4,000 note. It was part of a 4-note portfolio, and it's only mom and pop paper. I don't buy institutional paper. Remember the thing with the short sales? I wanted to shoot myself in the head. So there must be an easier way to get brain damage than to work with the banks. So just following suit, it's just owner carry paper that I buy. So they've sold a piece of land, they've sold a house, they've sold a mobile home park, they've sold a mobile home in a park. So they're receiving these payments, right? The seller, the owner of the property, becomes the bank. So the buyer gives them the monthly payment, and that works great, right? Every month until they need a lump sum of cash. Right. So then they go, I want to sell my note.
Yep.
Because I want cash instead of the monthly payments coming in for the next 5, 10, 30 years. Right. So, it's easiest for examples. Let's see. I'll tell you a teeny little note that I did last year. And I normally, I'll just say this, mobile homes in parks. Now, mobile homes on land I love that asset class. Mobile homes in parks are really tricky. Yep. And it's a whole different thing. And I still do projects, but usually now I don't buy other people's paper that's in parks. I will originate my own. So I'll buy the mobile home, I'll fix it up, and I'll carry the paper. That way I'm working in a park where I already have the relationship with the management and the ownership, because that's key, because they can chop you off at the knees if they want to, right?
Yep, it's very risky.
Space rent is a priority lien position. So it all comes down to the relationship, right? And if I buy a note from someone else far away and it goes bad, I don't have that. I'm not local. I don't have that relationship, and they can just put liens on for back space rent and just wipe me off, right? And so I've done reasonably well, but there were two where I just really took it in the shorts, and I said, yeah, that was a good seminar. Not gonna do that. The numbers sort of made sense. They made sense all day long on paper, but you and I both know that the movie often plays out differently than that. So,
Yep.
but so for mobile homes in parks, I only do it in my own backyard now. And usually I'm just originating it, or at the best, like some guy carried paper at a park next to the project that I'm doing. And, it was a $12,000 note. I gave him 6,000 for it, and he left town. So that's where where you make the yield is ridiculous, but it's not a ton of money. But if I step and repeat that kind of thing,
Yep.
turning six into just buying them at 50 cents on the dollar, little bits of money, and I know how to take over that asset if I need to. It's just 2 miles from my house. But other than that, the biggest, I've done notes that are we bought a $600,000 note for 400,000. Right. And that was a $200,000 discount. And if it goes full term, we'll make 12%. But likely it'll pay off early. And our effective yield is that if you're willing to go long instead of have a super short term mentality, those portfolios over the long haul will outperform the short minded people in general, because you buy a note that you think it's going to take 12 years to pay off. Oh, you get it paid off in 5 years. You just added about 5 points to your yield. So instead of 12, we'll most likely be off more in the 17 to 20% range, just statistically speaking, right? Because we bought it at a price where we expected it to go long, but usually they pay off early.
So are you one? Go ahead.
Go ahead.
I was just saying, are y'all, when you look at these, are you wanting it to pay off? Or are you wanting to keep it for the cash flow long term?
Yes and yes and yes. Yes, because it's great. Long-term cash flow is great, and not having to find another deal. Your money just stays working for a while. You don't have to churn and burn it so much, right? But when they do pay off, man, if you like, I have a note where I bought it to go out. It was really had 28 years left, so I bought it at 50 cents on the dollar. So when it paid off, oh my gosh, I mean, it just was an extra 30 grand, and I didn't have to work hard for that. It was because I was already getting a good yield on it. What I bought it was 14%. My investor was taking, the going rate for passive money in my world is about 8%. If you need too much more than that, you need to be working your own money. But for the safe stuff, right? For the safe haul, that there's not a lot of drama with it. Anyway. So the thing is, how can you, I want them to pay off if there's a big upside. If there's not a big upside, no, it's great to churn it. But I don't know. There's a lot of people that have a hard time wanting to go long. Oh my gosh, I don't want to be stuck in this investment for 28 years.
Yep.
I'm like, well, it's long known in our industry from the guys that have been around for a long time. They did, the people that had, I'm only going out 7 years. I'll only buy partials or whatever. I'm never going out farther than 7. And then we had another portfolio of guys that decided, no, we're fine. We'll go all the way out. But so they would buy the yield, but then, people are moving every 7 to 10 years. So they're not, so many of those notes that they bought out to go long paid off early, and they got these gigantic unearned discounts, right?
Yep.
So over time, the people that were willing to go long and not be greedy and hustling so fast and, needing to churn and burn it all the time, they did much, much better. So I don't know. I think a lot of people should have maybe some short term and some long term and some property, some rentals. I don't know. I like diversification in asset classes in our industry, which is real estate and notes, and some geographic diversity as well, in case there's some, we just saw in Houston or areas of Florida where, like, if all of your eggs are in one basket, that can be pretty tough, right?
Yep. So like, say you had, say I came to you and I lent you money for 10 years on a note, and we bought it for X amount, and it had this huge gap, and it did pay off. how does the payoff happen with both y'all? Does it split equally, or is it on a percentage basis, or how does your lender on the front side go about understanding how they're going to get paid? Because a lot of people probably want a long-term return, but that's the real question. What happens if it pays off? What happens if you sell the note? What happens to that gap?
Yeah, that's a great question. So, like most people can relate to it. You do these kind of negotiations all the time on real estate, where you might have a JV partner on a deal, right?
Yep.
Right? Or you have a debt partner. So you just have to decide: am I bringing on debt? Am I borrowing money to buy this asset? And the upsides for me, but if it crashes, I also have to keep paying. You know what I'm saying?
Yep.
You have to, if it's debt, you have to keep paying it no matter what happens. So sometimes you might bring in a JV partner, joint venture partner, right? So that, hey, we own this property. I found it. I'm fixing it up. You put up the money. We'll split the upside 50-50. You have maybe a preferred return of 6 or 7% guaranteed, but everything above that, we split 50-50. Does that make sense?
Yep.
That's what I'm saying. So same thing with the notes. So if someone says, hey, I want an 8 or 9, somewhere 8 to 10% return, I might just say, great. Well, then I'm going to take that on as debt, and I'm going to keep the potential upside for myself. So because I'm comfortable with a lot of these play out really well, and I'm better off keeping the upside for myself. Just like if I bought a property, I'm better off just having debt against it and keeping the upside for myself. But other times I would bring in someone who's willing to take a lower preferred return. So if they're willing to come in the 6 to 8% range, then I'm willing to say, if this pays off early, or if we end up with the property back and we have a bump, whatever it is, I'm willing to split that with you. But for that, I want you to take a lower preferred return. Does that make sense?
Yes, it does. So like I think what you said earlier is really important, that you want to stay close at home, because I do own some notes, and we do some minor notes, but this is not my main focus. Now, a lot of people in the note field say, well, just go buy notes all around the country and go buy them in these lower markets, smaller notes. But it's important to understand that if you're buying that note, you need to be prepared to take that property back.
Yes.
And if you're a brand new note buyer and you just want to be a passive investor, and all of a sudden you got some little frame house that you take back in the middle of the flyover country, you can be in a big headache, right? So it's good to have someone. Yeah, so it's good to stay local in the beginning, and then maybe as you get more advanced, branch out. Also, what about this? Like, so say, you and I went into a note together, and I was your underlying lender, and because people change, right? So I may have fully intended to leave that money out for 10 years, and then here we are 3 years later. I may be getting a divorce. I may be having medical issues. I want my money out, but it's tied up. And I come to you and I say, give me my money back. I need this money. What's going to happen in that situation? Can you replace that money, or how does that work?
It all goes back to what kind of relationship do we have? And if we were in it together in the beginning, we would already have a pretty decent relationship, because we have to trust each other. It's not just about someone giving me their money and trusting me. I got to trust them that they're not going to jerk me around or be high maintenance or be unreasonable when there's a workout to do or something like that, right? So what I've done in the past when people need it out early, and they understand, like sometimes people come in and they treat it like an annuity. Like if you get a younger investor, sometimes they're like, oh, well, I'm going to give you my money. You're going to give me 8%. And I go, well, you understand that you're buying this note, and this one goes out 7 years, this one 10, this one 15, potentially, right? Yep. Chances are they'll pay off early. Oh yeah. And then I get a call and it's like, oh, and this is a year later. Well, I think I'm going to buy a house. So can you give me my money back? And I'm like, because of the relationship with your dad that I have, and and you're young, I'll do this, and I won't ask you for a discount. But normally, so give me a heads up, give me 30 days, and I'll bring another investor in to take your place. But what you have to realize is that's a lot of paperwork and bouncing around for me that I didn't sign up for, right? And so normally what happens if someone wants out early, and it would be fair for me to ask someone who wants out early to take a little bit of a discount at least to give me a couple $1,000 to make it worth my time to switch the paperwork around and address something that was a set and forget in my
Yeah.
portfolio.
Or even go find another lender on their own to bring it
Yeah,
in.
but I still have to do all the paperwork to switch it out. So
Yeah.
like usually, yeah. So usually I would say, if you want out early of something, you usually market pressure would say you owe someone a discount or cover their costs or their time or whatever. But realistically, when I have a relationship with an investor, like, they're not going to screw me around and they're not going to ask unless they really need to. And I'm not going to ding them for it either, because I really value, I mean, don't we as investors really value our private money partners? I mean, that's our lifeblood. We treat our money partners good. And if there's a loss to be taken and I can in any way absorb it, which thank God, so far I can, some little deals have not gone well. Okay, we're out the attorney's fees. Well, I eat that. I
Yep.
want my investors to have a really nice experience and not to lose money. When you get your investing partners losing money, pretty soon you don't have investing partners anymore,
Yeah,
right?
like what you just said there is something that people listening right now really need to take to heart. Just, I do the same thing. Many times my investors have no idea anything went wrong, and I take it on the chin. And sometimes it's not cheap, and they think they're just getting their return and everything is going good. But on the back end, I'm taking it pretty hard.
Right.
But at the same time, that lender needs to be respectful and understand that they have just as much. I don't know what the good word is, but they're in that deal together, and it's not fair to you to say they'll come to you as if it's no big deal. Oh, I need my money out. It's a pretty big deal to have to restructure that, and a lot of work and a lot of headaches. So just if you're on the lender side, realize that if you're going in, especially working with someone like Don, who's a high level individual that can handle this, if you're working with a brand new investor in your market, what if they can't just simply go pull that cash out or find another lender to come and replace you? They may not even be able to do that, so you want to make sure who you're working with in the first place.
No, everything's relationships from everything in business, no matter what you're doing. It's you work with people you know, like, and trust, and people will sell you their house if they like you and they trust you, and they'll buy from you if they like you and they trust you. So it's really about buying people. Like when people invest with me or they sell their note or their property to me, they're really buying me. And they don't want to think that I'm going to assign it or that I'm not going to be involved in paying that note down the road. They bought me.
Yep.
And so, who you are, if you're trying to get into investing in whatever way it is, who you are is more important than what you know. I mean, yeah, who you know, but like, who are you? Like, do you have integrity? Do you really have it? Like, seriously, you got to look in the mirror and become the kind of person that people would, even if you're 5,000 below everyone else, be the kind of person where they'd rather work with you and leave $5,000 on the table. That has happened to me since the beginning, because I'm just real. I'm just a mom. I'm a nurse. I'm just doing my thing. I say what I mean. I no bullshit, and I do what I say when I say. That's all it takes.
Yep.
I do the right thing, whether it's in writing or not. Ta-da! I can outperform a lot of my market. That's all it takes to is that rocket science? Too bad it is, right? Where people have sometimes just don't naturally do the right thing or what's fair. What's fair to everyone.
It's a weird thing. I mean, people used to do business with a handshake, and now, they can't even honor a contract anymore. People think like a contract means nothing. And it's just, I mean, we don't want to get too negative, but there's a lot of people in this business that, don't fall on the ethical side of things. And so once you find someone who does do what they say they're going to do, yeah, you may want to give up a little bit more of that deal just because you want to value that partnership. So it's good to do that. So when a lot of people are creating their own notes, are you taking houses subject to or buying houses direct from the seller and then wrapping those notes, or are you just buying other notes that were created, or what is your focus?
All of that. So to date, let's talk about that. People are creating their own notes, right? They're rehabbing the properties and then turning them around with owner carry. Then they want to liquidate, right?
Yep.
So I have some of my portfolio, probably, I don't know, maybe 24 notes that fall in that category. And and it's been a learning experience. Some of those have worked out a lot better than others. So what I like to do in that case is create sort of a partnership in a way where the seller who created the note keeps a backside of the note so that I have built-in boots on the ground. Something goes wrong, I have someone who's has a vested interest
Yep.
in helping me solve that problem because I don't like headaches and not having boots on the ground, right? So, and then I've taken subject to and wrapped. I just closed a couple of those recently where there's existing financing on it. And but once you understand how paper works, the different seller financing strategies, and then the opportunities that you have to sell the notes in the secondary market. Once you understand that mysterious puzzle piece of the secondary market for notes, you can create so many more solutions. So just like when I was in the ER, and I said this on the cruise, I mean, what I love, I don't do high volume anything, and I don't do a ton of step and repeat. I have little aspects of my portfolio that are similar, but I love taking what I know and whoever I'm talking to, I can buy cash. I can buy owner carry. You can leave your existing note in place. I can sell to you for cash if you have cash. I can carry the paper for you, and if I need money, I can go to one of my partners and say, buy a piece of this note so I can have my operating capital back. Now I can't remember what you asked me, but I mean, I do a little bit of everything because once that's the thing I was trying to say earlier and just keep rambling on. But once you understand the secondary market for notes, I mean, that is the grease that just makes everything else glide together so
Yep.
well. If people can just get that piece, that's why I'm so passionate about it, because I can create so many more financial solutions in my little teeny community of Carson City of 55,000 people because of what I know how to do. I've saved several escrows from falling apart. I've helped a seller that was never going to get their cash price. That's for dang sure. I've created home ownership for people in my town that otherwise would have no way of owning a home. So to me, it's a really high level. It's profitable, and I just feel so good, and I find a lot of meaning in being able to function this way.
Okay, yeah, we'll touch on your take on the overall system here in just a second. But before we dig in there,
Yeah.
let's kind of look at this because I want to hear your take on this because like all the REI clubs and expos I go to, you hear all these, gurus out there, and they're like, oh, just go buy the junkiest little crappy house. It can have, bad electric. It can be torn down and just owner finance it to someone that has no credit score as long as they have a down payment. That's not really that smart to do. I mean, what is your pre-screening, you're not just taking anybody that's got a bad credit score. How do you look at and screen a potential individual if you're selling that property to them on payments, or if you're looking at a note that you're going to buy from someone else that created it? Because even just a big down payment does not always mean that they're going to make the payments going forward. A lot of times people put up 10, 15 grand and can't even make it 6 months, right? So kind of how do you look at the process when you're kind of looking at the buyer
That's a great point. And to me, like if you're going to do that model where you're taking really low end properties and you're putting homeowners in there, that's great. But if there's a lot of rehab to be done, just know you take a small down payment and you don't do the rehab, there's a really, really high chance of default in the first year, actually, of that note. So but if you buy low enough, this is the way I would think about it. And that to me sounds like the underwriting category of a mobile home in a park somewhere way far away from me. It's gambling money. Okay, it's gambling money. So if I'm in it $5,000 and I sell it for 20,000 or 15,000, and I do a bunch of those, and I'll still do well even if 40% of them go bad. Okay, but I know it's going to be a headache, and I know, but there's still a lot of money to make. But you have to think I'm gambling when I do that. And the secondary market, if you have a note buyer that knows what they're doing, they're not going to like that paper. So unless you have your own buyers, back pocket people that are in your back pocket and will buy whatever you sell them, no matter what.
Yep.
If you're trying to sell on the market, like to someone like me, I'm going to go, okay, let's get an appraisal, BPO or appraisal. I want to know how much is the property worth in its as is condition, right? For cash. And then I want to go, what's a 30-day cash price? So in some of those areas, the cash price is 5 or 10 grand, but the owner carry price is 30 or 40, right? Or more. So in some of those areas where it's just so tough, because if someone really, really paid $20,000 for this house and they put 5 in it, then to me, the cash value of that house, 30-day quick sale, if I have to take it back, is $25,000. They may have sold it for $50,000 and taken 5,000 down, right? Or a lot of times they're only taking 2,000 down, like the equivalent of a security deposit. To me, it's like, whoa. So I just know that, I took a note back. So I'm going to actually have to figure out what will the market tell me is the actual value of it. And then when I get it back, it has all this rehab that was never done in the first place. It's just a bad situation. So I don't like it. So if you do it, just realize that's a note for keeping. You're not going to sell that paper for very much. And if you do, that note buyer that buys that kind of paper is going to get an education over the next few years, because there's going to be so many losses. There's going to be so many losses. And then if you're not local in that market, you don't have your own rehab teams to go in there and take care of this stuff. So I would say it's a nice gambling strategy, but like, you got to be cleaner about it. And usually I'm collateral based thinking, like, okay, I want to buy a note and I don't want to be exposed. If the property's worth 100, I don't want to have more than 65,000, whether I'm originating note or I'm buying an existing note. That's how much money I want exposed. But if you have good credit, if the buyer has good credit, let's say all we're asking is over 600, right? 600, 620, and 700. If it's over 700, you can go to some buyers that are credit-based note buyers, and they'll pay 85, 90 cents on the dollar. Or I would never do that. I would never do that, right? I mean, credit will help you a lot. So if you're actually going to carry paper, get the biggest down payment that you can get from someone who has the best credit score that you can find, who can easily afford the payment. You got to do your ability to pay calculations, right? Don't set someone up. And if they can afford, the higher the interest rate that they'll agree to, the better, and the shorter the amortization. Then you have a note that if you go to sell it, you'll take the least possible discount.
Yep.
Right. Highest down payment, best credit, highest interest rate they'll agree to, and the shortest amortization.
Yeah, that's really good information. So this is why she's an expert, guys, because a lot of people just throw the first person in there, they'll bring a down payment. A lot of times they try to sell the house retail. They couldn't do it, and they panic, and they're just trying to figure out any way out of it. Okay, now so let's look on the selling the note side. How are you doing these closings? Are you using an RMLO? Are you having a loan servicing company on the back end? What's the traditional seasoning period to get a higher, do you hold it for 3 months, 6 months, a year? What is that kind of seasoning period that you have to hold it for to where you're really going to be more comfortable, where you see buyers give you a higher payoff at a higher percentage of the note value, face value?
Okay, so just if for someone else who's going to sell out there in the market somewhere, right? So get all the things I said, right? The thing I just said: highest down payment, best credit. Impounds are great. It's a great if depending on the asset class, right? But I'm just going to talk about your average up to $150,000 house, right? This rehab flipping kind of stuff, right? So impound for taxes and insurance, and get a note servicing company involved right from the get-go, right? You use your RMLO and board it for servicing, because the independent pay history is going to go a long way for you in trying to sell your paper. So when I'm buying a note and they don't have it serviced with someone, then I've got to collect, bank statements and copies of canceled checks, or they say, oh, well, he pays me in cash. And I'm going, oh, it's hard. How can I verify payment history? So it's going to be well worth it to pay the 15 or 25 bucks, whatever it costs to board the note and get it serviced right from the get-go. And the longer the longer it is seasoned, the better it looks, the tastier it is, right? Salt and pepper seasoning. That means the more months they've actually stacked up, that makes that note tastier, because most notes that are going to fail because of how it was put together and the type of people are going to fail inside the first year. So if you can get 12 months of seasoning, so much the better. But the reality is, because of the clawing about for paper these days, you have a lot of people, and I've done this too, where all they do is take 1 or 2 payments and I'll buy it, or a partial. But I keep my exposure low, right? I'll only come in with a partial.
Like what if it was a good structure like we just talked about, and you were to buy, okay, so let's give people a good reference range, right? So first of all, what we're talking about with seasoning is consistent payments by that person that bought the property. So what would you do if you had the same note and someone came to you, I came to you and said, hey, I need my capital out of this quickly. I'm going to create this note. The buyer's good. Will you buy it at the closing table versus how much you would pay for it 1 year later after they've made 12 consistent payments and seasoned that note for a year? What kind of spread would you be looking at?
Like if it's green and it's not extraordinary, like sometimes if it's extraordinary, like someone put 50% down, that compensates for the seasoning issue or a credit score sometimes, right? But I would say that if it's green, I'm going to want to stay at 50 cents of what the property's appraising for. Okay. If it's seasoned, I'll probably go. It's probably easy to get instead of 50 cents, probably in the 65 to 85 cents. It'll make a big difference if you're willing to season it. So get the right person in it. And if you put a bad person in there and the note goes bad, you deserve to have the risk, because you're the one that did it. Why hurry up and sell it and leave the note buyer with all the risk? You know, when you didn't rehab the property, there's major problems. You know, their credit compromised. They don't have enough reserves to be a homeowner. Something breaks, they have to fix the water heater. Now they don't have money to pay the rent, yep, or the mortgage payment. So you need to have your brain on. It's not rocket science, though. I know sometimes people hear me talk and it's like, oh, that's so complicated. And I go, I'm really sorry that I made it sound that way. But I mean, that's why I wrote that book, Seller Financing on Steroids, way back it's very simple, high level, introduce the brand new person just to the concepts and try to make it make sense. It's not rocket science, but you do have to just learn the basics, right? And once you do, man, you are just you can have the competitive edge in any market if you will take the time to understand how notes work, because then you're a wholesaler. Great. Well, what if you come across a note? Do you know how to wholesale a note? Why don't you? It's not that hard. Property and paper, it's two sides of the same coin. You know, just use, if you're going to invest in learning how to do one thing, you should easily, with a little bit of work and a little bit of thought, be able to do both sides equally well. That's my position. That's what I do here.
Yep. So guys,
someone brings me a note, someone brings me a property. Yay, great. It's all the same thing to me.
I mean, like, we went over a lot of stuff right now and a lot of good information, but clearly in a 1 hour podcast, you can't go over too much stuff. So she's got a way for you to learn a little bit more, right? So you got your website. It's notequeen.com or?
Yeah, notequeen.com and our summit that's coming up October 9th and 10th. That's propertypapersummit.com. But they can find that just by going to notequeen.com. But what I like to do, I don't do high level coaching. I don't sell high level products. What I want to do, I love doing what I do. And what I want to do is be a thought leader to help other people do in their communities what I'm doing in mine, because it matters so deeply to ourselves and to the people that we interact with.
Yeah, so you have, you doing a call side or weekly calls, or how does it work?
Yeah, there's 2 to 3. Well, there's usually 3 live interactions per month. So one webinar and an office hours kind of thing. Call in, ask whatever you want. And then we're gradually over the next year going to be adding specific training segments. And if someone comes into the community and they have a specific question or a need, then I'll create a content specifically around my members. So it's just a way to engage more deeply in this conversation so that you start to understand that when you start to be able to see a deal when it's in front of you, and then know what to do with it and how to think. And there's the possibilities that are out there are just so amazing. No matter which way the market goes, if you can add this owner financing and note piece, you can just move with whatever's happening and where the opportunity is. And if someone comes with a problem, you can solve it. You got all this juice. So yeah. If people, yep.
I mean, it's going to be tough for y'all just to kind of jump into notes real quick, or really real estate investing, or really being an entrepreneur. It takes time, it takes repetition, it takes going over things over and over and over. So what seems difficult becomes easy over time.
Right.
Now, I've been on a number of those calls, and the information you're going to get is way, way higher than what you're going to find at your local REI club. So you have a membership site that you can join, a one-time membership, right? And it's, talk about that a little bit, because I know that that's a great opportunity, because other people are out there charging 40, 50 grand, and they can work and get the same equal information, if not more, or if not better information, for a much better price point. So I really like the model that you have.
Yeah, so thanks. So if you go to Note Queen and you sign up under, I don't know, there's a login page, and it's called training. I call it, since I got this ridiculous brand called Note Queen, and let me remind you that I am the queen. But Connor, I will knight you as a knight of the realm. But yeah, you can become, I call it a citizen of the realm. I just keep going with the brand. It's fun, right? So, and if you're not having fun, you should quit and don't watch any more of these right now. You should be having fun doing what you're doing.
It's good branding.
Yeah.
It's good. It's a good brand. I mean, it's, some people, anytime anybody makes a brand, some people are going to be like, well, I don't like it, but they can't forget. It's hard to forget that, right? So it's a good name.
Exactly.
I like it.
Yeah. So thank you. So people there's two ways to engage. It's a one-time fee of $800 just to join the community, because I make my money doing the deals, but I do like to be a thought leader and work with other people. Right. And so that helps me cover the costs of paying the web guys and the hosting sites and all of that. Or if people can't afford the $800 and they want to test drive, they can pay $97 a month. That's just for now pricing. Things are always subject to change, but they can pay $97 a month for 12 months and they're in. So for basically $1,200, they can be in if they pay $97 for a year, or they can pay a one-time fee of $800. And they'll be in lifetime, as long as I guess I'm alive to do these things. And, and the people that I connect more deeply with when I do have notes that come across my desk and I know someone wants to invest, I like helping them get started. So those are the people that also have more first priority to my help, to being an investing partner, and those sorts of things. So that's what I have to offer right now, besides the 2-day conference that's coming up.
Yeah, that's an incredible deal, by the way, guys, because for lifetime membership, it's not like every year you're going to get hit with that big fee again, right? It's one time, and what you can learn from her for under $1,000. I think it's a no-brainer. Inside the group, are you doing, are individuals within your group doing deals together? Is there structuring help, or kind of what happens if I join the group and I got a note that I'm trying to create or buy and I have no idea what I'm going to do? How does that work? Can I get on the live call site and that everybody talks it over? What's a good strategy?
Exactly. So let's say, depending on the timing and how desperate you are, but like when my members have a deal they want to talk over, okay, you're going to be we're going to focus on you for our transaction review and calculator practice. And then if they still need more, or they need to pull me out of my regular life, then for highly discounted rates, I'll work with them one-on-one, just to say, I'll hold your hand A to Z. And once you see it done once or twice, you'll get it. I promise you, it's not as mysterious and arcane topic as it's sometimes made out to be.
Yeah. Okay, Don, I appreciate you coming on. I know you're probably looking at the clock. I know you got to run like literally right now. So I appreciate you coming on. Grateful to have you here today, guys. Go check her out all over online, and she's got a ton of great information out there. And we'll see you on the next episode of the Investor Army Podcast.
All right. Thanks, Connor.
Thanks, Don.